One thing we want to talk about also is Tesla. Our David Faber, he did an outstanding interview with CEO Elon Musk yesterday, sitting down, wide-ranging on a number of topics. One of them, of course, was self-driving and the outlook for self-driving for Tesla. Just take a listen.
My prediction is that probably by the end of next year, we'll have probably hundreds of thousands, if not
hundreds of thousands,
if not over 1 million Teslas doing self-driving in the U.S.
And just to clarify, because we can't play the whole interview once again, that includes people who own Teslas and also robo-taxis. Bryn, you're kind of our resident Tesla expert here. What did you make of that interview and the idea there might be 1 million Teslas out on the road doing full self-driving?
Right. Well, right now it's supervised. I have a Tesla. I can drive it. My house to the airport, never touch it until I'm going to valet. 2 years ago, it drove like a 16-year-old learning how to drive for the first time, very herky-jerky. Now it's so smooth, it's so intuitive. I know David talked about some report that said it ran through a red light. I drive it all the time. It's been exceptional. And I think that all of a sudden when we as Tesla car owners can just rely on that is, and pay $99 a month, people are going to all flip that switch and pay the $99 a month. And then where the second half of the interview really came when Elon came back is with Optimus. And so between autonomy and Optimus, which Tesla is going to build on that manufacturing plant already in existence, and then use them on their own plant at their own gigafactories to begin with, is a whole new vertical. And so I feel like in the next few years, people are really going to understand this is not just a car company. They're doing so many other things. And I said yesterday on Closing Bell, it is underestimated the manufacturing expertise of Elon and team and what they're able to do from a manufacturing efficiency. It's just like never been seen before. And so I think people will continue to buy the dip. I do think the stock around 300 to 400 has a top there, and so you can sell calls. But I think this will continue to be a stock that investors will and should buy the dip.
All right, two things. I want to correct myself. Supervised self-driving is what he was talking about, not full self-driving, where you can just go in the back seat and take a nap or anything like that. But our David Faber, he actually brought up a really great point. Currently, BYD, that supervised self-driving is included in the price of the car where Tesla's planning a subscription. Now, of course, Chinese EVs aren't sold here in the U.S., but what about the global business? How big of a threat is a BYD or other competitors not asking for a subscription, but including it in the original price tag to this business model and this idea when we're talking about Tesla?
I don't think it's an issue globally, but the country that matters the most for Tesla is China. That's where you're seeing, they probably hit peak oil a few years ago. I mean, they have EVs all over the place. And so I think that, it seems like Elon has a very good relationship with the Chinese government of having somewhat of a fair playing field. And they talked about it yesterday. They need to execute in China and be able to have that full self-driving to be able to, I think, have broad mass adoption. So we'll see. I think that they'll get there. But BYD in China is 100% a massive competitor.
I think what was accomplished yesterday in that excellent interview with David was Elon Musk was able to successfully alleviate, maybe temporarily, some of the fears that you have. First of all, I mean, obviously, next 5 years, CEO. But beyond that, to Bryn's point, you began to question over the last several months, is this a car company or is this a car company with really good technology? So kind of a little bit of a hybrid of the two. I think yesterday we stepped more towards, okay, this is a technology company. But I also thought the words where he said, we will be extremely paranoid about deployment, I actually think that's comforting to shareholders. I think it's comforting that they're taking a very conservative approach and that they're going to supervise the rides and that, in fact, they're not going to go places that they're not familiar with in Austin. I think that's the right approach, and I think as a shareholder, that kind of made you feel good about the strategy.
It made you feel good, but what about the other side of the coin where Waymo seems to be well ahead of them, doing about 5 million autonomous rides just in the last 5 months? This cautious approach by Elon Musk, it might be prudent, but are you worried that they're going to get behind when it comes to this autonomous driving race?
I mean, that's a next level of thinking about your ownership of the equity. That's not wrong, but I don't think in the near term it really affects the price as much as the words we heard yesterday, which were comforting, were able to positively affect price. You're not wrong in what you're suggesting, but that's something that evolves, I think, further down the line. I think he was able to really reverse or steady some of the concerns that the marketplace had.
Terry, I want to ask you, do you agree with Bryn's thesis that China is actually the most important market? They get about 20% of revenues out of China, and they're facing a lot of competition there from BYD and other EV makers who, again, seem to be folding this autonomous driving service into the product price, not asking for a subscription. And let's also keep in mind the Chinese economy is not in great shape by any means.
Yeah, that's definitely true. I would say that Tesla is a complicated story, and there are times, for example, the last month, where investors gravitate toward all of the good news and excitement and technology, and the stock is up, I think, 55% from April 8th. And then there are times when investors are going to worry, and they'll just focus on what could go wrong and what's happening in China and who's the competitor and who else is competing with them on the autonomous side. So, you can have these wild swings. It's a very expensive stock on a multiple basis, and therefore it's going to be subject to swings. This recent market, and highlighted in part by what he said to David Faber about the future and the concepts, which are kind of mind-blowing. It's just another example of how dominant and how important these companies are, such as NVIDIA or Google. I mean, look, just quickly, look at Google today. Everybody was saying, they're going to lose out on search. They're losing. Let's take those numbers way down. The stock got hit very hard. And do you think they've been sitting around doing nothing related to AI? Of course not. They've been waiting to introduce something, which they're doing.
To your point, Alphabet shares up almost 5% right now. Very quickly, we want to move on, but you were mentioning how expensive the Tesla is. I'm looking at it right now, trading at about 163 times forward earnings. Just really quick around the horn. Joe, does what you heard yesterday, does it justify a valuation of 163 times forward earnings?
Frank, valuation.
That was Joe. You started with
I mean, but valuation is something that generally I don't believe is really an accurate predictor of where the future price action is going to go. There's a multitude of examples of stocks that have single-digit valuations and have gone nowhere for years, and then there's triple-digit valuations where you see very strong price appreciation. So
is this the former or the latter?
Obviously, everything that we do is anchored in studying momentum. So as long as something presents itself as having the momentum and gives us the revenue growth along with it, then we're comfortable with that.
Bryn, Kerry brought it up, but I saw you nodding your head a bit. 163 times forward earnings, is that justified based on what you heard yesterday?
Oh, PEs you just can't ignore PE. Go with what Joe just said. It's arbitrary, right? It's completely arbitrary. It's like never going to make you money looking at a PE, whether it's 2 or 2,000. Roblox doesn't even have an E, right? And so how do you put a price on 1 million robots 5 years from now? And so, I mean, the robots are coming. Jensen has said multiple times, this is a multi-trillion. Like, $1 trillion is a very big number. And there's many companies that are making them. But if you think about it, as a publicly traded company, they already have the manufacturing to build the robots. They're putting them on their floor. That is a whole new vertical, which today is zero revenue. And I think the market is sniffing that out and doing math around the potential growth of just Optimus over the next 3 to 5 years. And that's where, like, an Amazon used to have a 1,000 PE, and now it has, what, a 30? So ignore PEs.
Okay. Kerry, you brought it up. Just a yes or a no, because we got to move on. You're the one that brought it up, so you can't say it's nothing.
I didn't say it was nothing. No. I think it matters less in the case of Tesla. How's that?
All right.